evening and welcome to the Australian Stock Market Show. It's been a super cold week here in Melbourne, but we plan to brighten up your evening as we bring you our upfront, no BS approach to sharing our thoughts on all things stock market. So for now, sit back, relax and be ready to learn. In tonight's show, we will cover many exciting stocks, including Bapcor, Horizon, Codan, Magellan and more. Our main topic for tonight is the best gold miners to buy in 2021 as gold prices soar. Hello, I'm your host Janine Cox, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening.
Hey, how you doing?
Yeah, good. And yourself?
I can't feel my feet.
Oh, really? You're frozen.
For the first time in 3 years, I looked out my bedroom window yesterday morning and all I could see was white frost over Elva grass, and it brought me back to my days playing football when I was 6 years old.
Really? Sliding on the grass?
Mm-hmm. Yep, freezing cold and trying to play football in a pair of shorts and a short sleeve jumper. It was terrible.
Right. I can't imagine you doing that now, but you know they do have the geriatric footy, don't they?
Are you calling me a geriatric?
I mean the older people's football.
I got a photo of me playing footy and the number on my back is bigger than me.
Oh, jeepers.
I know, it's terrible, but welcome to COVID capital of Australia, guys. It's like, hey, wow.
And the stock market's been
You know what's good about
too.
COVID?
Are we going to talk about the stock market?
No.
I don't want to talk about COVID.
Don't you? Oh, okay. I just thought it's nice.
Too much doom and gloom going on.
Nobody comes and visits me during COVID. That's really good. They don't steal my beer. They don't do anything, which is really nice. So I'll go back to the market then, okay. So if tonight's your first time watching our show, welcome to the show. We really appreciate you taking the time to be with us. And I'm sure you'll be rewarded, as tonight we're set to share some valuable insights that will give you an opportunity to profit more if you choose to follow them.
Now, Dale, we have received some great emails once again, and as usual, we have had to edit many of them down to focus on the questions asked. And as always, we give preference to those who support our channel and subscribe. So take a moment to click on that subscribe button now to show your appreciation and support to the team that bring you tonight's show. Moving on, it is the first Tuesday in the month, and this means that we look at the Australian market. So let's get into the charts.
Okay, so, wow. On the screen right now, we've got a chart of the All Ordinaries Index. Now, this is a monthly chart, isn't it?
That is the monthly chart.
Do you want to talk about it? Because I get sick of me talking about it.
Well, like I bought the monthly chart for good reason. One is because I asked you, and I had the weekly chart up.
Because you asked my permission.
I wouldn't ask your permission, but I did ask you, do you want to look at the monthly chart? And you said yes. So I have delivered. The reason for looking at the monthly chart, though, is more because it gives a big picture, bird's eye view of what's going on. And we know that back in 2007, the GFC high, you can see that line I've drawn across there. This was the high in November 2007. And of course, we only managed to break through that here. This was in July 2019. Now, nowhere in history had the market taken this long to make a new all-time high. And nowhere in history did the market make this sort of a move on the downside.
Yep.
Right? So in this
talking about
case,
speed or severity?
Oh, both.
Both.
Yeah, so in history that we've got two things that are, I guess, anomalies that haven't occurred in the past. Now we're seeing the market go to a new all-time high on the back of record government spending, low inflation, reasonable unemployment rates, although we don't know how COVID is going to impact on that, depending on what happens in Victoria. And companies are doing reasonably well. Listed companies, a lot of them are doing well, especially in the commodities area, and the cyclicals are doing really well, aren't they? Yeah,
they're very, very well. And to me, I spent yesterday on my report that I did for the US market for Flicks. I talked about the history of the S&P and how long the bull runs were, and I've just done it today a little bit with our team of traders and assessors. So I spent about half an hour, 45 minutes with them, going through the All Ords with them and talking about why I've been saying the All Ords is peaking out. It's got to be peaking out at the moment, and we do need to be going down into some sort of low.
For how many weeks, roughly?
Well, right now we're not going to. And somebody said on the YouTube channel, why do you think the stock market's? You said the stock market's crashing. No, I've never said the stock market's going to crash.
No, it's got to go down to go back up.
It's got to go down to go back up again. So all I'm expecting is a bit more of a minor pullback at the moment, somewhere between 8 and 12%. That's really what I'm expecting. But I want to show you something on the chart.
Well, where's the good news on that? So you're talking about a pullback will happen. It's like the market having a breather, as it's done in every case, as it's pulled back through here, there could have been pullbacks to that order or slightly more. But up this rise, when it started to get stronger in 2017, it was having much smaller pullbacks until eventually we got this decline in 2018. And then it took off again. So it just goes to show it needs to do that to keep making new highs, doesn't it?
It does. Now, our market on a yearly basis, it has two pullbacks in the year, one larger than the other one, yeah?
Yep.
Has it? So, since March 2020, March last year, we're past 12 months, yeah?
We haven't had a pullback of that order.
We haven't had a pullback of that order. All we've had is this sideways movement and then a move up. And that's part of the reason why we're saying we're overdue for pullbacks. Because generally you'll get 2, sometimes you'll get 3, but generally it's 2 on the Australian market. And we haven't had that pullback yet.
Yeah, I'm sure investors don't want any pullback, but it's better to have an orderly decline and a pullback over, a couple of weeks or maybe a month or so.
Yeah, I'm expecting 2 to 5 weeks-ish back, somewhere 8 to 12%. I'm still thinking that. But about 4 weeks ago, I was saying, well, if the market does go up, I'm expecting maybe about 7,600 points. Well, maybe that's going to come now, because I thought we'd pull back and then go up to 7,600 points, sort of more towards mid to sort of the third quarter in the year, and then come down into a low sort of maybe September, October, a slightly big one. But right now the market's making new all-time highs, so it's a little bit different. But did you want me to show you the bull markets?
No? Look, why not? If you want to talk about that.
I've got to put my glasses on.
You have to be quick.
I have to be quick. I'm always quick.
Yep, okay? You're on the clock.
So basically what I was looking at is how long the bull markets are, and if we go and look at, I'm going to use a specific little tool here. Here from the 87 low there, we look at that and we go up to here, we can see the market has done 240 odd months from the 87 low to that high, okay? But what I want to do is go from this March 2003 low, and we're going to count that from here. If I can move, okay.
Yeah.
Come on, move over here.
If you can't work the equipment, what do they say about getting out of the kitchen?
Okay, that's 56 months up to there on that one. So that's from the 2003 low that we had. So we had a nice pullback into there. And if we go and have a look at this, that's the COVID, that's the GFC low. We've now risen, if I drag this down, 146 months from there.
Is this going to take long?
No, it's not. Why? You're just impatient now. You like the charts.
We're on the clock.
Okay, I better shut up then. But I'm just saying.
What's your point?
Right now, we're in a very, very long bull market. If I go right back even further into the 70s.
Yeah. So you're saying we're at the very early stages and there's a long way to go? No,
I'm saying the very late stages of it at the moment. So we are in the late stages of a bull market. So we do need to come back. Now, again, I'm still not saying we're going to crash. I'm just saying we need to have some sort of an adjustment right now.
But do you expect the market to go up in the second half?
I still expect our market to be bullish this year, but depending on how far it goes now in the next 2, 4, 6 weeks, if we do come down into a low over the next 2 to 4 to 6 weeks, then I think it'll be bullish in the second half. Otherwise, I think we might be in trouble.
Okay, you heard it. That's all from us about the Australian market for now. Now it's time we get into our first email.
Okay, our first email tonight is from Dan, and Dan says, "Hi Dale and Janine, I was just wondering if you could take a look at Bapcor Limited." Now, BAP hit an all-time peak of $8.53 on the weekly chart in October 2020. However, it hasn't been able to break through those highs since. However, seems to try and test those levels. Your thoughts on this stock for its potential over the next 12 to 18 months? I don't currently own the stock. Regards, Dan. It's great he tells us he didn't own the stock, which was really, really nice.
That's helpful. Yes.
Okay, so on your screen we've got Bapcor. On the left we've got a monthly, on the weekly chart is on the right-hand side of the chart.
Look, I'd say simply, if it manages to stay above last month's low, which is 7.15, this thing's long-term bullish.
Okay.
That's my comment. And
that
that's short and sweet. You've never heard it that short and sweet before, have you?
Dan paid his 50 cents for you to answer the question. Now, I think you can do a bit better job than that, girl.
Well, I think we've talked about this stock on another show that we had, and it looks really nice how it's consolidated sideways, and a rise above here would indicate that it's on its way to make the next rise, okay? And it's got significant potential, I think. Do you want to talk about that? Well,
I was just saying, it's because Dan's mentioning it's a resistance right across here. So we've had that big peak there, which is talked about, the October 2020 high, and 8.53, an all-time high. So it's struggled and it's moved up once, got up to 8.39, failed to get through it and came right back here. It's moved up again, 8.40. failed, but it's made a higher trough, which is good, but it's not looking super strong at the moment. There's only 2 days, though, this week.
Well, if it wasn't for last week's bar, I would have been really concerned about it in thinking that it could threaten that prior low
That
there.
one down there?
No, the one in front of that.
That one?
And that was just looking a little bit questionable, but now that we had that strong move up last week, it's getting so close to that prior peak now that it just needs another couple of weeks and it's going to.
I think if it gets through there, 4th time luck, it's going to go through.
Yeah, but just remember that downside risk that I just mentioned before.
Oh, geez, I didn't need naysayer.
Okay,
give Dan some good news, will you?
You've always got to consider the downside. We have an email from Jarno. Hi, Dale and Janine. I know you've covered CBA in the past few weeks, so I'm not going to ask that you look at it again. Rather, I'd like to understand what happens when such a stock hits over 100. Is it likely to show big changes in its trading pattern or maybe experience higher volatility? I've been reading that when stocks reach certain milestone levels, organisations like fund managers are in essence forced to buy into such stocks due to their rules for investing criteria. Best regards, Jarno. What a great question.
It is a really good question.
I still want to look at the stock.
But you don't need to answer the question. We'll look at the stock, but the question is, he's saying if a stock hits $100, the fund managers change their investing criteria, and the answer is no, they don't. Okay. What you're talking about, Jarno, is moving into different sectors. So regardless of the price of the stock,
different indices.
Indices. Sorry, I used the wrong word. Slap me. Different indices. So if it moves from, say, the top 200 and the top 100, then you'll get more fund managers moving into it. If it moves into the top 50, then it's much more of the fund managers wanting it. Top 20, and again, they raise that. The price of the stock is irrelevant to that. It's its market capitalisation that's more important. But there's an interesting thing around $100, isn't it? Because Australians are just cheap bee. I didn't say it. You know what I mean. Australians are really cheap, and they think a stock at $100 is so expensive, which is such flawed thinking. It's not even funny. So
you're saying if they lived in America, they wouldn't think that way?
No, they wouldn't think that way. And Australians love to have things under $5 or $1, and we see it all the time on this show where people are giving us these cheap stocks, low price stocks. Doesn't mean they're cheap, because a stock at 20 cents could be very expensive if it's only worth a cent, isn't it? But a stock at $100 could be really, really cheap.
Geez, you're hitting them hard this time, aren't you?
Well, it is. Well, there's an old saying: a wise man learns more from a fool's question than a fool does from the wise man's answers. Oh. But yet, constantly we get people asking questions, saying, like, they go, "Hey, Dale, I know you said da 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 da," and then they go, "But," and then they tell me they want to do the opposite. And I go, "Well, why are you asking the question in the first place?"
Okay, so this point about $100.
Okay.
Okay, what can happen when a stock gets to $100?
Yeah. It could find some resistance.
Often companies, look, in the past, companies would have, because people are thinking about the cheap, the companies will do the split and reduce the share price but increase the number of shares on issue. Now, CSL did that many years ago, but I don't see Commonwealth Bank doing that. That, to me, would just, I think, cheapen it when it doesn't need to be.
It doesn't need to be, yeah. I think it's a high-quality stock, isn't it? So what's your outlook? I know we did talk a little bit about our outlook for Commonwealth Bank.
Oh, look, I mean, given that it's gone through the all-time high and it's trading up so strongly like that, I'd say over time it's likely to go up. We're expecting the market to go up over time, and for that to happen, the banking sector has to go up. However, in the short term, we may get a little bit more of a rise, but there's a risk on the downside, like you say, for the market at the moment. So if you weren't in it, you wouldn't be buying it right now.
We wouldn't be buying it, but I think there's a little bit more room in it at the moment, but not a lot. I'm in the same opinion anyway. But let's get on to our next question. The next question's from Chris, who says, "Hi, Dale and Janine. I'm looking to stash my nest egg somewhere for medium to long term, preferably with a nice dividend. And Dale, I know how you feel about trying to pick the bottom, but how do you feel right now about AZJ? It had a sensational post-COVID recovery followed by a downhill roller coaster ride, nearly reaching its COVID low recently. Could this be a great opportunity for a long-term investment, or is it the world's resentment for coal power going to prevent Horizon from ever seeing $6 again?" Good question.
Do you pick bottoms?
No. He said, "I know." He says, "I know you don't like it picking bottoms."
Okay.
I get slapped in the face if sorry, I shouldn't go there, should I? Other than my wife.
That was a loaded question, and he walked right into it.
I did. Answer the question. Is it going to see $6 again? Yeah, well, one day.
Well, you don't know that for sure. I mean, at this stage, it's coming back to test those lows. That's a huge support level there at across 330, 340.
Yep.
chances are it's likely to rebound a little bit from that level, but there has to be some upside that the market's looking at for this stock. So there has to be something that the company comes out with that's a bit more positive, and who knows when that's going to happen.
But my question is, why buy it?
If it's falling,
Yeah,
you wouldn't. You have to wait until the big money's behind it.
Yeah, what's the story? Just because it's gone down to this sort of prices right down in here, which is what it's hit recently.
Well, that's where people get caught out, because they look at stocks and they think, oh, it was trading at $6 a couple of years ago. It must be cheap now.
Yeah, but it doesn't matter. It's like going into any store. Is just because something's cheap doesn't mean you have to buy it, does it?
No, and if we look at them, let's have a look at the monthly chart.
But is it cheap at this price too?
Just to get a bird's eye view, well, the fact that it's traded down at $2.50 or $2.60 in the past means that it could always trade
downhill,
lower.
Yeah, and it could always trade lower, but that's the point, isn't it? Is this stock fundamentally cheap when it's come down to that 344, or is it still expensive at that price?
Look, I'd say in the short term, there's a prospect for it to find support there and move up from there. But it doesn't mean that that move up will be sustained.
Correct. Yeah. Well, I agree with you on that one, because sometimes people buy on these stocks and then they just see them go flatlining for weeks, months, and or years.
And that's where the challenge is, isn't it? In trying to pick stocks, there are stocks that you can look at to pick the bottoms that are safer than trying to pick something like this.
Yeah. So again, what's the story, mate? I think that's really what it is.
Yeah.
Make sure you've got a good story for it. All
right. Now we've got a question from Shoaib. Hello, Dale and Janine. Can you please look into AMP? I own AMP and got in at $1.10 on Thursday, 25th of the 5th, and it had a sharp rise. At close of market, volume traded was around 50 million, but after close, volume of trade went up to over 348 million. Huge trades with codes SSXXT, L5XT and L3XT. What do these codes mean, and your opinion on this stock in future, considering the huge downside and issues it has had in the last few years? Thanks, Shoaib.
I didn't laugh at you trying to say all those codes.
Didn't you?
No, I was being very respectful.
Oh, okay. Do you think it was funny?
No, I just thought it was funny that you were trying to say all those.
Yeah, I was saying SXX. It sounds like something else.
Sounds like something else, doesn't it? It's just, I mean, simple answer, isn't it?
Isn't
really?
it?
Do you want to answer it?
No.
Why not?
Because I wanted you to.
Oh, God, I don't know about this. Hard to get good help, isn't it? Basically, it's aftermarket trading. So the market for retail investors closes at 4 p.m. After that, then we have institutional trading. Like Janine and I can place trades till 10 past 4, roughly.
Well, it's about
in the market.
It's got to do with crossings as well.
Yeah,
so
I'm going to say that.
SXXT is a special crossing trade. So it's where there are crossings, it's where a broker is acting on the buyer and the seller side. And there are different ways of being able to put trades into the market. So there are other codes like CXXT as well, which is, there are all sorts of different codes. But
yes.
As an investor doesn't need to know these sorts of things.
No, it's all irrelevant. And basically, if you've got 100 million shares to sell, and the broker says, "Well, I can find somebody for those 100 million shares," you don't want to put them into the open market during the trading day, because obviously you'll affect the market. So if they just switch, as long as the buyer and seller match on a price, then they're going to switch. And that's really what you're saying. Is it's just a quick way for institutional traders to actually swap stocks. Basically one buying, one selling. But it's also all the institutions doing match-ups and all sorts of stuff. So the volume at 1 minute 4 will be different than that will be at 10 minutes past 4 or half past 4. It'll be different anyway. So it's pretty common. It's not an unusual thing. And it's not about market manipulation or anything dirty or underhanded. It's just a quick way for one institution to get rid of shares and another one picking them up.
All right. It's time that we get into tonight's topic, which is the best gold miners to buy in 2021 as gold prices soar. In November last year, we revealed the truth about how gold generally trades in the direction of the stock market, rather than contrary to its movements. So perhaps not what you may have been led to believe. In tonight's show, we'll share more of our thoughts on gold and discuss some of the best gold miners listed on the ASX.
Now, right now, investors are being told gold is a good hedge against inflation as state and federal governments continue to inject large amounts of capital into the economy to keep it growing. Now, this has experts concerned about inflation as it's forecast to rise. So, should you be buying gold or gold stocks to create a hedge against inflation for your portfolio?
Right now, to help you, I wanted to put some context around inflation. If you visit the Reserve Bank of Australia's websites, it explains that inflation is an increase in the level of prices of goods and services that households buy. It is measured as the rate of change of those prices. Now, currently inflation stands at around 1.1% and the RBA's target's actually 2 to 3%. To put all of that into context, we're currently a long way from the RBA's target, or that point at which inflation could be said to be out of hand. Now, let's take a brief look at a chart showing the historical inflation rate in Australia in recent decades, and there's been an overall trend down. However, more recently, we've seen direction in the rate tick up at the same time, and growth assets like shares and gold have been rising. So Dale, you've talked about inflation before, and how it's a bit of an issue for investors, haven't you?
Yeah, a lot of there's people out there saying, inflation. We need to be a little bit worried about that. I know it's both in the US and in Australia, but when you're looking at inflation figures, 1.1%, it's not a lot, is it?
No, it's so low,
and it's not expected to grow. In the US, I was only telling our team today, when I was on my meeting with them, saying, well, even the US government's Biden's brought out its first budget, which is double that of Trump's last budget, the amount of spending that they're putting in a typical Democrat budget in terms of infrastructure and everything. But they're forecasting basically about 1.6% growth for the US market over the next 5 or 6 years. They're not expecting a lot. So and they're pumping truckloads more into their economy than we are into our economy in terms of GDP and all sorts of other stuff. But I think, I think
this is a really challenging time for economists to try to get this right, don't you?
Oh, it's hugely bad. It's like, economists only have one hand at the best of times. So really, it is a hard time for anybody to predict where the market's going to be, whether it's the stock market or where the economy's going to be in 1 or 2 and 3 years' time, because COVID is an event-driven thing. So if we have more outbreaks in Australia, even in other states, not just Victoria, if we have outbreaks in other areas around the world, that will really affect the supply chain.
Well, look, all I can say is that if I look at what's going on with property around the world and how we're in this property boom or perceived property boom, and knowing the cycles and the way that it's worked around the world for decades, we're at some sort of a midpoint in all of that, or just past the midpoint of that. So you would think that even though there's all this doom and gloom going on, that the prices are going to continue to rise. There's now talk of the government saying that they're just recently going to encourage people to put money into their superannuation, and they can sell property, and there's a bigger lump sum that you can actually inject into your self-managed super. Now, they did this some years before the GFC hit, before the big peak in the stock market. So, I can only see that sort of policy as fueling the stock market. And I hope that they're smart enough to get involved in what's going on. What happened with COVID, with all of the hedge funds and all of the shorting that went on, and the lending of stock that the super funds can do. I really hope that investors actually get more savvy and start asking their super funds, do you allow that? Is that part of the fund that I'm in? Is that allowed with mine? And if it is, then I want to be out of it, and I'll go to a fund that doesn't allow that sort of practice.
I know we've talked about that a few times before, because I know especially when we're talking about inflation, we're talking about gold. People go to gold for safety mainly. They're worried about the stock market and other markets, but people also do that a little bit with property as well. If they think the stock market's a bit overheated and not great, they'll go for safety, relative safety of property. So we're seeing that at the moment as well. But we're seeing a lot of borrowing going into the market, a lot of people going out there and borrowing money from their houses and all sorts of other borrowings. So,
if we look at the inflation rate, right, if we go back to the 80s, which is where the chart starts, it was right up around that 9.87%. Now, this was a time, remember, when interest rates were so high.
Yes.
So we've got the opposite situation right now. Interest rates are at rock bottom lows, and the inflation rate is just at it's at a significant low. Now, this actually is 2024 forecast. So they're expecting that the inflation rate will tick up back into the range that the RBA is looking for, between 2 and 3%. And by 2026, it'll be around 2.2%. Now, this chart was produced by a company called Statistica. So they've put that forecast together, and that's what they're expecting. So no dramatic moves like what we've seen in the past necessarily, but just a gradual uptick, which is, I think, really bodes well for our economy.
Oh, it does. Statista does. It's a great website. I often get statistics from that myself anyway. So are we okay? Right. Can I move on now?
Yep.
Okay, so now you've basically seen our simplified view on inflation and whether you should use gold as a hedge. is that gold is not a direct hedge against inflation. However, if you invest in growth type assets that are growing or going up in value over the longer term, whether it be gold or gold stocks or any stocks for that matter, you will be creating a hedge for yourself against inflation and be somewhat at least ahead of the increases in the cost of living. Now, how much exposure you need to offset a rising inflation rate is going to be different from one household to another household. And this area that you can do some research on yourself online if you really want to get into more details in this area. So, I mean, the websites like Statista is really good.
Yeah. Now, before we get into the gold stocks, though, back in November 2020, we shared how gold was likely to pull back before a rise in 2021. As the gold price fell, our analysis indicated that gold would fall to around $1,700 an ounce. Gold actually fell to 1677, so slightly off there, but it's approximately. So you're going to learn, if you're doing analysis, that these levels that we set are approximate. So prices will bounce around those levels.
Elastic. I like to call them elastic.
Yeah, and especially more volatile stocks. And before reversing strongly and rising in 2021, the price of gold has recently traded above $1,900 an ounce. So shortly, we'll take a look at the price chart of gold and then discuss the best gold stocks. So should we do that soon? You ready to go?
Can I say something first?
Yes.
I had a gentleman the other week said to me, Dale, I want to put a percentage of my portfolio in gold and or silver. What should I do? What would you answer that?
I'd say just what's your portfolio strategy and what are you trying to achieve?
Yeah, because it's about looking at the overall bigger picture, and that's what I'm saying. So I'm saying to people, if they're thinking about buying gold, you can either buy physical gold or you can buy gold stocks or you can buy gold ETFs, yeah?
Yeah, I think we better get back into it.
So it's about what percentage you put into it. Well, if people are looking to hedge, what percentage should they be doing that? And that's really a personal opinion, isn't it?
Well, that's what you just said before.
Yeah,
that they have to work that out.
Correct. So they'd be looking at it, do you take a normal position or what else do you do? Okay, so now, but we do believe it is always a good idea to have at least one gold stock or company with exposure to gold and or a gold ETF on your watch list. So you really should be doing that anyway. Whatever you choose to do, it is important to make your choices based on the type of portfolio that you're running and the goals of the portfolio, and always consider whether the stock suits the type of portfolio and the level of risk that you're willing to take. So, for example, if your portfolio strategy is about growth and income, gold stocks can be beneficial in that situation.
When selecting the stocks, remember to check the price chart to get an understanding of how it moves in relation to the price of gold, because the growth of a stock that more closely tracks gold is generally more predictable. Selection of stocks can be very difficult for investors, and unless you can learn to read the price chart, a picture does tell 1,000 words. So let's get into some charts of the stocks of gold, shall we?
Okay, so on your screen...
Stocks of gold.
Stocks of
Did
gold.
you like that?
I'd call fields of gold.
Fields of gold?
Fields of gold. Stocks of gold, whatever. Okay. So what have we got on the screen? So we've got the watch list here of the gold stocks.
Yeah, so there's some stocks that have exposure to gold, and there's some just gold stocks.
Pure gold plays.
Yeah, and FMG is actually one that could be on that list.
Pure gold? Okay.
Just went straight over my head.
Yeah, went to the keeper.
Okay, so you can see there, I've got them ordered by market capitalisation. On the left-hand side, I've got Newcrest. Newcrest Mining is at the top. Obviously, there's the company name, the last price, the change in price, and the market. So this is a daily change in price.
Yep.
Market capitalisation. Now, if we change that to the month, we can see what these stocks have done over that time. We've only got one day in the month, obviously, so that doesn't really help us, but we're looking at the market cap and we can see Newcrest is the biggest company there, and then Northern Star Resources second, Anglo Gold, Evolution Mining, Oz Minerals, IGO is another stock that's got some exposure, Chalice Mining, DE Gray Mining. So there's quite a few good gold stocks to choose from that are liquid enough. But once you start getting down into this zone here where the numbers start to drop right off, then the liquidity is dropping off. You're having all sorts of issues with being able to get in at the price you want, and the volatility will be there at times. And it may be in your favour sometimes, but then it could work against you just as quickly. So that's our list of gold stocks. And the key is to choose the biggest, most liquid stocks out of the pool of those. Now, I'd suggest not looking below about, 500 million. Is that a good number?
Oh, look, I'd be there with you, absolutely. Because,
Yep.
I mean, when you're talking about Grange resources, we looked at it, I think, a week or two ago.
Yeah, but you have to look at
that's
them
getting
like
there.
the chart anyway, just to see whether it looks liquid enough. So this is where an eye of understanding how to read a price chart and just to determine whether it's liquid or not is really important. So first of all, I wanted to show you the gold spot price. So here we've got, this is in US dollars per ounce. It's showing you a chart of the long term on the left-hand side and the weekly chart on the right, because we always show the big picture as well as the shorter term view. We can see how gold has risen so strongly up above that $1,900 an ounce point there, if you could just show that there.
Right.
Yep.
Well, you take the mouse.
That was the all-time high, but the $1,900 an ounce just below that there.
Okay, gotcha.
So it's actually gone above that level. And we've seen that decent pullback in almost 20% decline on the gold price, and then a rebound to recovering almost half of that just in a very short time. So you'll notice that the gold price trends really well. There's some really nice strong moves up. See how it goes up and down with a bouncing ball as it rises? There are lows and highs and lows. That's what you want to see in a stock or in anything that you're looking at trading, so that it's much easier to be able to get a decent profit out of it. Now, what we're looking at here is the gold index. It looks very different to the gold price, doesn't it, on the monthly?
Hugely different.
Yeah, much more volatile, and that's because it's weighted to Newcrest. Newcrest is the bigger gold company in the index, and therefore it's going to look a little bit more like that. I just wanted to show you, now I've just got to see what I've got on my chart here. Here we go. So I've overlaid Newcrest Mining on the chart, so you can see what's really important when you're looking at any stock to actually look at what the underlying stock, or the, say for example, if we're looking at the index, how closely does the biggest stock in the index actually replicate that data, because there's no point using that index as an indicator of what you're going to do. You may as well just look at the stock.
Might as well look at the stock,
because it's heavily weighted to it. But if you're wanting to look at what the impact of the gold price is on, there we go, or what the difference in the movements of the gold price is versus a stock or index, that shows you how closely it's tracking the actual gold price, and whether that's going to be easier, much easier for you to trade, because we saw the gold price trends beautifully. We know that that's our yardstick, if you like. So, can
I ask a question while you're on that chart?
Yes.
Do you want to go back to the chart?
Okay.
Because the important question is basically when you're looking at stocks, can some stocks be more, if the gold price is moving down, are some stocks going to move down further in percentage terms than the gold price, and the opposite in terms of rising?
Yes.
Okay, so that's what so it's not necessarily going to be if the gold's moving down $1, then the stock will move down $1.
No, but sometimes you can get stocks that move really closely with the gold price. So that's what you're wanting to look for. But what you're trying to highlight is the difference between percentage moves and the actual pattern of the chart.
Yeah, because what I was trying to say is, I mean, obviously people go, hey, look, if gold's moving, I want to get in on a gold stock. And if it moves roughly, let's say one-on-one with gold, it moves with gold in the same sort of manner and same sort of percentages. A lot of people are saying, well, which stock's going to make more money? So therefore, you'll be looking at stocks that may be more volatile, that may move at a faster rate than gold. But the upside potential's there.
Yeah, I guess from an analyst point of view, it's about the stock that you know well. So you've got to pick some stocks that you think are going to perform, that if they more closely represent the gold price itself, are going to be easier to analyse. Because then you can go back and analyse the gold price, work out where gold's going to go, and then relate that back to the stock and where it's likely to go. So you've almost got two layers of analysis that you can look at.
So that's more safe.
Yeah,
and people that want to be more speculative would go for something else that...
Yeah, so an ETF, right, obviously is a group of gold shares, potentially, or it's related to an index.
Which is the safest way to get into gold.
Yeah, so therefore, if we look at what this Beta Shares Gold Bullion ETF is, it's a hedged one. You can see that here, I've just enlarged the chart up a bit. You can see here that I've got that line, which is the gold spot price again. We've just double checked. And look how beautifully it tracks it. So that's what you're looking for. And because it does, then they're doing quite well, obviously.
So the stock ticker code for that one, if people want to find that, is what?
It is QAU.
QAU.
Yep. Actually, the ticker codes for the other ones are that the gold index is XGD, and the spot price for gold, it's a world index, GLD. Yep, simple. Now, the first big stock was Newcrest. We talked about this back in November, how volatile it is. So I'm not going to go into a lot of detail, just a quick overview. We can see that while it does have similarities to the gold price, it's so much more volatile than the gold price, you know, and it doesn't always track it. So when the gold price goes into a low, sometimes Newcrest can turn at different times. So, and this big fall down here was just so out of character and fitting with the gold price itself. But it could be a good stock for short-term trading because of that. And I did a report recently for our weekly report that we do for our traders.
Our students,
our students, yeah, and graduates. So talking about all of that. Northern Star Resources, that's a really interesting one. Notice how over the long term, if we just enlarge this chart up, and you can see it, and I've just gone off the left-hand side of this. It's a, you know, you need someone who's experienced doing this, don't you? Looking at that, you can see that for a while, for a long time, it wasn't actually tracking what was going on with the gold price, but more recently has been more in line with what's happening. Now, gold has taken off much more strongly than what Northern Star has, and there may be another bit move to come from Northern Star to follow that rise, but we'll just wait and see. But I like this one. I prefer that stock over Newcrest simply because Newcrest, the volatility and it seems to be so out of sync with the gold price, and it doesn't trend as well. But then if a stock falls away, then it means that it's going to go towards the bottom of my list. I'm not just going to keep it there just because, you know, I've looked at the gold price and said that it tends to track the gold price well, and therefore I'd always buy it. That's not what I'm saying. Evolution as well, over time has tracked the gold price for a while, you know, and then at times it might get out of sync slightly, but overall it's moved up over time. Much more volatile, obviously, than the gold price, but still heading in that right direction and looking really nice at the moment. Saying that, I wouldn't be buying right now, but I'd just be waiting to see if it pulls back and see what Evolution does after that. It's
looks
another
good though, doesn't it? It looks
big
really
liquid
nice.
stock, yeah. Now, FMG has an exposure to gold. Now, what I found really interesting, because, okay, FMG is an iron ore stock, right?
Yeah.
Now, look at how well the gold price and FMG tend to sort of follow each other to a large degree. So I thought, well, you know, this is interesting, isn't it, when iron ore is the dominant factor for FMG. So, you know, if we're expecting expecting gold to go up, then in theory, if iron ore keeps going up, then you'd think that FMG would keep going up. FMG obviously has to prove itself. We're not just going to put money into it just because we think that, you know, that the commodities are likely to go up over time. It's got a hurdle, you know, it's got some resistance around here, around that $25 mark. If it falls below this low here in May, at 21.19, then of course you'd be waiting quite a while, you know, and I'd like to see it fall back below there, but if it doesn't and it holds up, well, that's
it's about
great.
cause and effect, isn't it, really? What causes the stock price of Fortescue, or what causes the price of Newcrest Mining to rise? What causes it to fall? Because obviously they're miners, that's what they actually do. So there's a lot of different things in the pot, you know, not just the US dollar rates, you know, the Australian,
what you're saying, it's a complex equation.
It's a complex equation.
And the chart is the sum of all of that plus the perception of the market.
So understanding what the core drivers are for each one of these companies will help you understand whether it's going to be more bullish or bearish.
Yeah.
That's really what I'm saying.
The challenge is, though, that then people think that they have to know everything about all of the commodities that a company's trading.
It's just a couple of the core drivers, whatever they are.
Yeah, but it's good to know that if we think the gold price is likely to go up over the long term, that could have a positive influence on some of these stocks and drive the share price with it if they're tracking it. Now, Oz Minerals looks amazing, the fact that it's gone up so strongly, but historically it hasn't closely tracked what the gold price has done, only over this period of time here where it rose so strongly. And yet Oz Minerals went the other way initially through COVID and then finally took off and rose really steadily. So at the moment we're expecting Oz Minerals to have a pullback, but I've been expecting Oz Minerals to have a pullback for a while and it's just kept going up.
It just keeps going up at the moment,
so, you
doesn't
know, it's a matter of if you took it, then you just have to set a tight stop loss underneath it. Now we've got Perseus Mining, and there were quite a few really good stocks in the gold space that we looked at on the watch list. This one has tracked reasonably well with what the gold index has done, although at times it can be more volatile. I like this one as well.
I do.
It's moved up nicely recently with the gold price, which shows it's following it. Looking at the weekly chart, so if we come back here, and we've got a nice trough underneath that rise, just this low here in May 2021. May seems to be the important date. If stocks fall below these lows in May, that could be a real concern. But at the moment, it's looking good. I think it looks nice. So that's Perseus Mining. And I've got Ramelius Resources, RMS. Now,
That looks great too, doesn't it?
It does. This is another stock that I talked about in our reports that we do for the students. And it's actually tracked over time. It has tracked reasonably well with the gold price, although more volatile, as you'd expect. And as you're going down that liquidity scale, you would expect there to be a bit more volatility. But it's moved up really nicely recently. And although that there could be a short-term pullback, I'd be expecting it to move up and challenge these highs, but this low has to hold. So we're talking about these lows that we saw on the other charts, but this one's actually in April, so slightly before the lows of those other stocks, but that needs to hold and provide strength for the stock to keep rising. So that's RMS, and I think that's all we've got time for now. Yep, that's it. That's the last one.
Oh, wow. Gee whiz, see,
So which stock did you like out of all of the stocks that we looked at? Which gold stock?
Oh, geez, I don't know. I'd like to, geez. There's about 4 of them I actually quite like in that. I mean, I like that. The last one looks great at the moment, or the last couple look really, really good, and I think there's some great stocks. I mean, they're all sort of, most of them, what I'm seeing, they sort of get liquidity. They're probably doing more than $10 million a week in it. And this is what is really important that I was sort of alluding to earlier on. If people are trying to go for that low end and try and speculate, they're going to get it wrong more often than not.
Well, chances are, if you're in something like gold, you're going to find a stock that looks really similar on the chart anyway, but is more liquid, and so therefore, why not pick that?
So that's what I'm saying. I like these because they are more liquid stocks and they are looking quite good. I mean, obviously, I didn't like Newcrest as much. It is a lot more volatile. It's a little bit harder for people to trade if they don't have good, solid strategies around it all. But it does look really, really nice, and we are looking at gold being more bullish in this next 6 months.
Yep.
You know, and anybody that when your interview, like Janine did an interview with the gold expert Joshua Rothbart, I think that went up yesterday.
Being released?
I think that went up yesterday on Flix. So if you go up to Flix, flixx.net, and click on the business and finance, you'll see Janine's face and my face. Click on the latest episode, which I think is 107, the episode. You'll see Joshua Rothbart, who you interviewed late last week on gold and that. So
yeah, I always enjoy catching up with Joshua. It's such an interesting
really good
conversation.
To talk to, isn't he? Yeah, he's much more of an expert on gold than what we are. We're an expert on technical analysis and charting and everything else, but he lives and breathes gold and silver.
Actually, one of our clients rang and had a chat with me about Bitcoin, just as a side issue, and was talking about the whole mining thing with Bitcoin, because obviously gold is there's a mining going on there. It's a commodity, and there's talk about Bitcoin being a commodity, so a different way of looking at it. Now, Elon Musk came out and said that it was getting too expensive to mine for Bitcoin. So once the cost, this is what my lovely client, who's probably watching, mentioned, and he said that once the cost of mining the Bitcoin falls, therefore it's got to go up again, you would think, in theory, and that's what the whole concept of mining is, whether it's iron ore, whether it's
the cost gets too
gold.
great. Yep.
When the cost gets low, then obviously the miners can just stop doing what they're doing and then wait for the price to eventually track up again when supply drops.
Don't they really? And I know I get some people saying to me, oh, gold's a finite resource. There's only so much in the ground that we can dig up. But it doesn't mean its price is going to go up forever, because it just depends on supply and demand. Yes, the supply may be limited eventually. It might be limited. If people want to get rid of their gold because they're going to make more money somewhere else, then they're going to sell their gold to go somewhere else. So you're still going to get fluctuations in the gold price. You know.
Yeah, but as you and I worked out in November last year, that most of the major fluctuations in gold occurred around market corrections.
Yes.
So, that whole thought about hedging, using gold as a hedge, it's not a direct hedge, because often the gold price is falling when the market's falling, but sometimes you'll see on the chart it will turn earlier. And I guess that can be an advantage if gold's going, starting to move first before the stocks are moving.
Yeah, I've been trying to get my wife off gold for a long time, but it doesn't work, guys. I tell you what, she keeps wanting more gold. Anyway, but I think it's about time we actually get back into some more emails. Okay, Janine, I think it's up for you, I think.
All right, we've got Joe. Oh, fantastic. Hi, Joe. Hi, Janine and Dale. I'm thinking of gaining some exposure to lithium and interested in ETF ACDC. Is that a rock band?
It was, yeah, it is a rock
It's a
band.
great rock band. The chart looks bullish, and that it might have potential to rise past its approximate 94 highest value. Could you let me know your thoughts on it, please? Thanks, Joe. I thought you were going to start
What a good name for an ETF.
AC/DC.
AC/DC and lithium.
You want to start strumming some tunes?
No.
You haven't got your long enough hair for that, though, have you?
I can't do the whole throw my hair
Head
around
banging.
a bit. Yeah, my head doesn't get any better than this. I wake up like this and I go to bed like this.
Okay, awesome.
But Angus Young doesn't
You're
have a
making
lot
me
of
laugh.
big hair. He didn't have big hair either, so...
Okay, so this is what we've got on the screen there, ETF battery tech and lithium ETF AC/DC. So you can see there on the left-hand side, we don't have a lot of history. So this is a new one that they've started. And so therefore it makes it much harder to work out how this thing is likely to perform over time. Looking at it at the moment, it's rising, but it's making higher highs and higher lows, but it's really not going anywhere at the moment. It needs to break above that high.
The volume's increased dramatically, hasn't
And
it?
the risk is, if it breaks above that high, the risk is it could come back after it, given the shape of the sideways consolidation that we're seeing at the top.
It's interesting, if you go and look at the volume, it really started taking off around January there. You can see most of it's really taking off. And here is January. So most of the volume coming into it was after it's already risen dramatically.
Isn't that typical?
It's so typical. And that's a lot of people don't see. I find a lot of people don't understand that most of the trading happens when the run's already over. The smart money's already in early.
Yeah.
And that really just shows the typical thing of the smart money was in really, really early. And then they start pushing it onto chat forums and whatever else, and everybody's talking about lithium, and then all the retail investors are jumping in.
And then they think, I'll get an ETF because it's safer, and they're not looking at the chart.
And they're not looking at the chart. So is this going up or down?
Look, I'd say in the short term, it has a potential to go higher. It's a question of how far. Like, it's getting towards that $100 mark. And what do you think of the shape of that move?
It looks strange, doesn't it?
Yeah.
It doesn't look overly bullish to me, that shape. It really doesn't look
Well,
overly
it's tried to
bullish
break out once here and it's failed and come back in again, and it's been pushed up again. So I'd say with the strength of last week's bar, the probability is that it's likely to go through that high. It's just a question of how high will it go before. And look, would you be putting your money into it right now?
No.
Okay.
No. And I think the argument is a lot of people say, well, lithium's in all the batteries, for cars and phones and everything else. And I go, well, that's great.
But you still have to time your entry to a degree. You don't want to be getting in near a peak, do you?
But if lithium gets too expensive, then what's going to happen?
Well, of course, then they're going to stop using it and find something else.
They're going to stop using it. They'll go to other technologies that may be better, cheaper, and everything else. So it's not that because lithium again is a rare earth and it's also finite as well. It doesn't mean it's going to go up forever either. Same as gold.
Do you go up in value?
I go up in value every single day.
You're a rare earth?
I'm a rare thing. Yes, I am very rare.
A rough diamond?
Most people, they say, I'm glad there's not two of you, Dale. Anyway.
All right.
Okay, moving on. Here's a question from George. Hi, George. He says, hi, Dale and Janine and team. Thanks for pointing out most of my mistakes, learning thus far, but you haven't mentioned the palpitations over accidentally looking at an hourly chart instead of a weekly, monthly chart for an owned stock. Yeah, that would give me heart palpitations too. Always a great way to get the heart rate up. Would you please cast your charting eye over CDA owned, as the volumes are still increasing from the start of the year, whereas last year they were slightly declining for the same period. A little headroom left, but watching a little more attentively for $19.50 to $20 barriers or signs into early July as it flattens for half-year results. After that, who knows? Thanks, George.
Okay.
Really good question, isn't it?
Yeah. Now, look, the chart looks amazing. Look at how strongly this stock has risen. It's incredible. I think it looks good. However, look how many months we've had straight up. Now, and you have to look at what it's done in the past. So if it moves up 1, 2, 3, 4, 5, so 6 or 7 months, and then 2, 3, 4, 5, maybe 6 months there, and then we're already up to 1, 2, 3, 4. The 4th month, is it?
Yeah.
And now we're moving on. This is the 5th month. So it could go up slightly higher, but it's going to... Look, some stocks knock their head around the $20 mark, which is quite amazing, isn't it? It comes back to that theory that you talk about.
Oh, absolutely, because it's a round number.
Yeah.
Stocks often find levels around those round numbers where it finds some support, which is there. Here's $10, it found a bit of support there. There's like $13 roughly. It found some resistance, and so you're looking at the 850. That didn't work, did it? That one. But
It's
you
not
can see
perfect science, is
it's
it?
not a perfect science, but there's around $3. So you see these sorts of round numbers that stocks. Now that's only part of it, isn't it? A part of the story. But I'm interested in what George didn't say why he thought $20 or $20.50. Why he's thinking that price.
Yeah, well, look, I mean, the interesting thing is that he's picked an important, it could be an important level for the stock.
Okay.
But if we go back to the weekly chart,
Okay.
just have a quick look. I'll just expand that up. You can see there that it's making higher highs and higher lows, which is a good thing. Look, if it goes below that low there, that I've drawn the crosshair across around $16, then that's when you'd have to really make sure you've got a stop loss in place.
So George owns his stock. That's what he said. He owns the stock. So right now, hang on to it.
Well, look, if you were holding it, you would be hanging on to that, wouldn't you?
Yep, I'd be hanging on to it. And the thing is, I'm not sure, George didn't say whether he'd be exiting at 20. He's just saying, well, that $20 area or that $20.50 area. To me, it's basically right now, George, is just keep, while it's going up, stay with it and get what they make hay when the sun's shining.
Just make sure you've got an exit strategy.
Make sure you've got an exit strategy. And right now, that looks like it's pretty ripe for a nice little trend line up underneath it if you know how to draw them. So
now we have another email, which is great, from Max. Hi, Dale and Janine. Would it be possible to do a review of the most trusted stockbrokers for trading shares and CFDs? I was thinking to open a CFD account with a well-known provider here in Australia, but after looking at some of the reviews online, there have been many complaints about the provider quoting different prices to the underlying market. Who's your most trusted broker for trading shares and CFDs? Regards, Max. That's
a short conversation, isn't it?
Yeah, we don't make recommendations on brokers, sorry. I mean, that's the first point. But the second point is the issue about what he was reading on chat forums. Because there are always going to be some people making complaints about that. But then, when we're talking about CFDs, it depends what you're trading, because there's over-the-counter CFDs and there are actually direct market access where you can trade the direct underlying price of the asset. Okay, so a CFD is a contract for difference, so you're taking a contract, or it's just like a derivative, over the underlying asset. And what people mistakenly do, and I think that there were some institutions, or some, I should say, companies that were actually defaulting to over-the-counter CFDs, which they can move the spreads on those and move the prices. So therefore, prices that you were seeing that were quoted, these comments about that, being different from the underlying can happen, but it's about understanding what you're actually trading, because they can't do that on the direct market access CFDs. So.
But finding one nowadays is a lot thinner on the ground, and I think, can I say something without being rude to George? If he's asking that question, he's not qualified enough to trade CFDs.
Right.
Because, you need to understand not only how to trade really well before you trade CFDs, because the leveraging will kill you. It seriously does. We've had, we deal with FX brokers and CFD brokers and have been since CFDs came to Australia. I remember CMC first came in 2002 and they come knocking on our door, and I've never recommended them with a CFD provider there to do that. But you've got to know how to trade and know what they are. So.
But look, some of our students use CMC and some of them use different...
they're a good broker, but
like
at that stage it was
IGs and other
CFDs. Yeah, but my biggest recommendation, mate, is make sure the CFD provider, if you do go with one, that they're an Australian-based CFD provider that have an Australian financial services licence, but you're going to have these market makers or over-the-counter ones pulling spreads out. It just happens. It's part of dealing with a market maker CFD provider. So it's understanding how they work and then how you should trade against that.
Yeah, I mean, like you say, they're there to actually provide a service to people,
and they're
so
all good.
that you can do that. But on the other side, if you understand how they work, then there is no issue, really, is there?
Yeah, and that's the thing, is just understanding them. And they're all good, because I know all the people that, the CEOs and stuff like that, all the CFD providers, and they're all good. Saxo's good, IG's good, FP Markets is good, Citi's good. They're all good, and they're all very honest, reputable companies. But often people complain about them because they don't understand how to trade. And they're making mistakes in their trading, and so it's easier to blame somebody else than themselves because they don't know. Is that good enough? Should I move on?
I think we've answered his question really well.
But good question, Max. Thanks for asking it too. The next question we have is from Win, who says, "Hi, Janine and Dale. Thanks for your ongoing education and valuable insight. I've been looking at a number of quality companies that have been sold off recently in order to find the right time to buy. One of these companies is Magellan Financial. Technically, it looks to be in a sideways move, attempting to break through a support or resistance at $47 to $48. Would appreciate your thoughts on this chart or this stock's chart. Thanks, regards, Win.
All right, Magellan Financial, there we have it on the screen there. You can see on the left-hand side, the long-term picture of Magellan. It's had a bit of a rocky road, wouldn't you say?
That's a big rocky road, isn't it?
Yeah. I mean, look, an incredible rise there pre-COVID and then the big pullback. So from 2019, it was doing amazingly well, and then an incredible fall through COVID. So if we just have a look at what sort of a move that this stock has made in the decline, just to compare it to the market. This is always important that you look at, say, what the market's done and what the stock's done. So the market did about 40% and the stock's done around 60 on the decline. So much more volatile than the overall market in its move. But what do you think now with the trading sideways? Has it got the potential to go down further, or is it likely to rise?
I don't know whether I'd agree with it's trading sideways. I mean, really, yes, it sort of is, but it's moved up and come back down again. So,
well, you can agree to disagree.
I can agree, but you can agree with him. That's fine. I don't mind. I don't mind having a punch up with you online. We've got a video recording of this. So
I've got cold hands. I have to warn you. They're like icicles.
Yeah, it's pretty
They
normal.
leave burn marks.
They probably do.
So
right now, I like
see,
this. I think it's good. I think it's really good he's brought this one up.
Look, sideways, it looks okay, but the question is, will it find support around $40 or is there a risk to the downside at the moment?
I think there's risk to the downside, but I think
What if it goes through that low?
if it goes through this low, then 44.22, then it's going to break that low.
Okay.
That's been my thinking, 42.01. But looking at it, I mean, obviously we've only had 2 days this week, and the market was down a little bit both days, so it's holding up quite okay. But if it does move up, it gets through that, I'd be laughing. I think it'd be a great one to be on.
Lovely.
So that would be my take on this one. What about you?
Yep, I think it looks interesting. Just being so volatile, so it's not for the faint-hearted, obviously.
No. No.
So you can't just look at a name of a company like CBA and Newcrest and think, okay, they're well-known companies, I should buy them. You need to actually look at the chart, have a look at the volatility and ask yourself,
Good point.
can I handle that if I put it into my portfolio?
Yep, I think that's
Okay.
right.
Next is an email from Julia. Oh, well done, Julia, in getting this one in. Hi, Dale and Janine. Wondering if you could have a look at CHC stock in tonight's program. Charter Hall Group, a property fund manager and developer, traded up strongly from March 2020 but appears to have gone into a sideways movement since January this year. And if it trades through the previous all-time high, I'm looking to find a buy signal. I'm interested in your thoughts. Thank you for the diploma course. It has been extremely well constructed. Regards, Julia. Thank you very much, Julia. There we go. So let's have a look at Charter Hall
Should be
Group.
sending the question into us.
Okay.
Not into the show, should be into
Trading Essentials.
Trading, yeah.
Looking at the rise after COVID, look how quick it recovered. Like the market as an overall, it recovered well, went to a new all-time high and has pulled back since then. So we can see that on the weekly chart on the right-hand side. I'll just expand that up. How it has pulled back strongly, but then it's traded up since then. It's trying to get back through that pre-COVID high, but so far hasn't been able to. If you got a strong
seriously
rise,
like this stock, I think it's good.
if you got a strong rise above that high there, that could be quite good for the future. But obviously, if it traded below this low here, I'd be quite concerned about it. I better get that crosshair off before you tell me off.
I'd never tell you. I don't tell you off.
Yes, you do.
No, I don't.
So this low here,
Don't tell me
at
off for telling you off.
13.21. If it trades below that, like we said before in previous examples, there's a risk to the downside. So at the moment, it looks like an interesting stock. Good choice and well done in looking. And property stocks at the moment, they're mixed, aren't they? Some of them are doing well and some are not. So some that are in the commercial space are struggling.
Struggling,
like,
yes.
Dexus, is it?
Yep.
That's been struggling. And the one in the retail space, Stockland and stocks that are in that exposure to retail where there's a whole lot of government support for the property market have been getting a benefit.
Yep.
So, but this one's done incredibly well. It's a good one, but it's lower liquidity. So if we look at the liquidity of this stock, we can see here we've got, what's that per week? It's about
got
10.
my glasses on, girl.
I know, sorry, but I've got to put that crosshair back on. I can't live without my crosshair.
That's about 7 million, just over 7 million where you've got your thing
yeah,
there.
so but that doesn't mean that
6, 7
it's sort of
million.
6, 7 million,
So it's
isn't
pretty
it?
liquid. It's really good liquidity on that one.
So, yeah, so 5, 6, 7 million a week, and then multiply that by the stock price.
Yep.
So that gives you a good idea of where it's trading. But it's not for everybody. So you might have criteria for your portfolio that says that you need to pick stocks that have above a certain level of liquidity, and look at the market capitalisation and see what the market capitalisation of Charter Hall is and whether that fits in your portfolio.
Okay, well, that's our thoughts on Charter Hall Group.
Now, what a great show tonight with lots of great questions. So you guys are really inspiring us to really want to give you more because of the questions you're asking. So well done to everyone who took the time to email in. If you like what we talk about and want more, then you can grab a copy of Dale's first book for free. All you need to do is pay the shipping. There is a link to it on the homepage of our website. So go to wealthwithin.com.au, or if we ask nicely, the team may... If they ask nicely?
No, if we ask nicely.
We have to ask for them?
Yeah, we got to grovel, basically.
Okay, so you have to send an email and ask us and we ask them. Is that what you want?
No, we just ask them.
The team may put a link in the description. Is that what you want?
In the description below, yeah.
Yeah.
In below, so down below where we are. So
Okay.
anyway, cool.
You wrote that, didn't you?
I did write that. If you desire to be a trader and you appreciate you need to learn more, then take action and email or call our team, as they're more than happy to spend some time with you. No obligation to help you. All you need to do is call 1300 858 272.
Well, that's it for tonight's show. And I got in before you. We hope you not only enjoyed what we presented tonight, but got a lot of value from our answers to your questions. So now it's your turn to help us and hit that subscribe button to really say thank you to the team who put in a big effort to bring you this show each and every week.
I'm not talking anymore. It's up to you.
It says my name. It's your turn.
No.
Also, remember to put this show into your calendar to join us right here on the Live Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your questions answered on the next show, then send an email to info@wealthwithin.com.au and type Wealth Within Live in the subject line. Remember, you must email and you must do so before 3 p.m. on the day of the show.
All right, as always, thank you for joining us, and we hope you have a great week. We look forward to you joining us again next week. But for now, goodbye, good luck, and good trading.
And can I say, a pinch and a punch for the first day of the month?
Okay, take a breath, will you?
I enjoyed that.